Good morning, everybody. Hey, welcome to Monday. It is Monday, uh, October 19th. We have 2 full weeks left in the month of October. And today we'll talk a little bit about China and we'll talk a little bit about our markets and what they're doing and how they've ended up. Not a lot on the earnings front today, but one or two reports. We'll look at the economic calendar looking forward and move on from there. So, hey, I hope today your week will be off to a good start after a great weekend. Look forward to our conversation with Dave right now.
Tracy Chat. I'm morning, Dave. It's 8:39 now, 21 before 9. This time of the morning, every morning we check in to see what's going on with your IRA and 401k. Nobody's been watching your money for a whole weekend. What are they doing to it up in New York? Well, let's see. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler standing by. Good morning, Phillip. You got to be happy. The Knowles won over the weekend.
I am. They made me sweat it out to the end, though, I tell you. But it was a great day to see them finally beat a top five team. So that was good. Hey, I want to start off. I want to start off today, Dave. Do you know what today's anniversary is?
I did it on history. It's the anniversary of the single biggest percentage loss ever on Wall Street history. 22.6% was it in 87?
It was Black Monday. So that's today's the 33rd anniversary of Black Monday, the biggest percentage drop we'd seen in forever in a single day.
Yeah, it was interesting. I mentioned it on history. It was like a 500 and something point drop, which in today's world is a bad day, but not unheard of, as weird as the markets have been for the last 6 months. But in 1987, that was 22% of the market's value, and everybody came off of that day and went, holy crud. But the net result was they fixed a whole bunch of computer trade glitches, put in circuit breakers, and now when we lose 500 points, we really mean it, right?
Yeah, we really do. You know, the other thing of that was that you had people starting to think about jumping off of buildings even back then.
Oh, Lord, yeah. It was a panic day. I was hanging around a news and information-based radio station at the time, and we had some people that had some substantial investments in 401ks at the time, and they were, like you say, they were contemplating jumping out of windows and wondering how long into their old age they were going to have to work after that day. Came back in a relative hurry, didn't it?
Yeah, it did. It was definitely a V-shaped bounce for sure.
Yep, the quickest correction in the history of Wall Street, I suspect. Bringing us up to 2020, we start the morning out with two tidbits of news that hit. Number one, you and I were giggling about this before we went on the air. China reported a growth in their gross domestic product of 4.9% year over year in the third quarter. Step number one, even that wasn't what the analysts expected, I gather, huh?
No, it really wasn't. They were expecting 5.5% increase in GDP. So that was a miss from their own records and their own analyst over there. The other part of that is it gave them I think it was a year-to-date number of being up 0.7% in their GDP for the year.
Yeah, I'd read that. That sounds anemic. And the other thing that's backdrop that you and I always mention with a certain tone of ridicule to it is in a command and control economy, when China puts out a disappointing number, you know the real number is considerably worse than that.
Exactly. You know, and you and I've talked about that a lot over the last couple of years when we look at the world economy and what comes out of China, because it's not a free market. You know, they do control what the press says and how the press puts stuff out there.
Oh yeah, we've seen that happen before in their stock markets too. All of a sudden, things start falling. The government edict says stop buying, stop selling, start buying, and it's amazing how fast that market can turn around over in China, isn't it?
It really is. You know, it's that's one of the reasons that it's a little sketchy sometimes when you start investing in Chinese stocks.
Yeah, the Chinese government in their release talking about their GDP growth was, this is an illustration of what happens when you handle the coronavirus correctly. Well, yeah, when you've got a gun to the head of your citizenry, you can pretty much get things done the way you want them done.
Exactly. When you control the people and dictate what they can and can't do, yeah, they can control things like that.
Does have a tendency. Over on this side of the pond, the overwhelming news that's probably going to affect the money markets for the next 48 hours is going to be over the weekend. Speaker Nancy Pelosi basically gave the Trump administration a drop-dead date of tomorrow evening to negotiate a stimulus deal, or she ain't going to do nothing, she says. Can't get it done before the election. Go, blow smoke. Ain't going to happen if you can't do it before Tuesday. And that, I'm not sure, for good or for ill, if we actually pass that date, it really is held. At the very least, it'll give the financial markets some certainty as to what's going on. This not knowing, I think, is the biggest problem we've got at the moment.
Well, it definitely is, and you and I both talk about how uncertainty is the market's biggest enemy. And so, that's one of the things that the market doesn't want to see is uncertainty. And the two big things we have right now that cause that is stimulus and COVID-19. I mean, both of those things, when they hit the headlines, affect the stock market.
Exactly. We can't do a whole heck of a lot about COVID-19 from a money standpoint, but the stimulus, even something would be better than nothing. And knowing there's going to be nothing would be better than herky-jerky, maybe there will, maybe there won't. I mean, nobody wants to have no stimulus come out because the economy does need some assistance, especially some sectors like airlines. But if there's nothing, and we know there's going to be nothing, at the very least, investors can make their decisions accordingly.
You're right. That's true. But I would say that, something is better than nothing. But the guys in Washington don't seem to see it that way, Dave. Maybe we need to just get rid of them all and let's put another group in there that can really talk for you and me and the rest of the citizenry of the United States.
I've always been a little impatient with the throw the bums out mentality across the board, but I'm rapidly going over into that direction because doggone good and well, it's political calculus that's going into this decision making, not looking out for the well-being of the country as a whole.
You're right. And that's, what do we need to do to keep the businesses afloat and keep them going? Because if we lose what the numbers look like we could possibly lose, it would be devastating to the economy for the long term.
Absolutely. And I've got very little doubt that the drop dead time given by Speaker Pelosi now is about 45 minutes worth of testing and winnowing on both the Democratic and the Republican side to find out what if the solution happens on Tuesday at 4:45 p.m. Is it going to benefit President Trump or Vice President Biden more? And the sides will make their decisions as to whether or not they're going to go for it based upon what their focus groups say.
Yep, you're right. And the other thing is there's the Senate's already said they put together a $500 billion deal that would help businesses and would help the people. But what's the likelihood of that passing because it's so much less than what everybody wants? Hey, let's just get something out there. Something's better than nothing. Let's take it a little bit at a time and get it done.
Bad beats nothing. Good would beat them both, but bad beats nothing. And knowing there's going to be nothing would be about our last choice, but it's better than not knowing anything at all, which sounds like government doublespeak, doesn't it?
Yeah, it really does. Hey, let's talk about a couple of companies. Let's talk about a couple of companies real quick. The only one I really got on the earnings front, and there's more earnings that'll come out after today. Tonight's close, there's some big names reporting. But not much this morning before the market opened, other than Halliburton and some regional banks. So Halliburton did beat, and so they beat by about about 8 cents a share. Revenue, however, was below what they expected. Again, because of the low oil prices, that's impacted the demand for their services when it comes to what they do in the oil fields. There's really, they're down 1.2% today, this morning after being down 6.25% on Friday, Dave.
All right. Well, a good report beats a bad report. On the energy front, a little bit of industry gossip I picked up. At the very least, the oil companies aren't sitting on their hands doing nothing. Conoco announced this morning that they're buying a company called Concho Resources. As I did my research on the thing, it looks like they're an oil field exploration company. So Conoco is looking ahead to an increase in oil prices, making it worthwhile doing some more explanation, and that's at least hopeful for the energy industry. Wouldn't you agree?
Yeah, it definitely is. That's a better outlook than what we saw in '08. But hey, the other one we have is CVS Health is
Yeah.
planning to hire 15,000 employees, including 10,000 pharmacy techs, as they prepare for the jump in COVID-19 cases and being able to roll out the vaccine. AstraZeneca thinks they're going to be able to roll it out after Christmas, is what they're saying in the headline. So that would be a good sign for jobs through CVS Health.
Absolutely. And I hear the British vaccine research is coming along nicely, too. It could be coming out at a similar time. So at least we get a couple that are getting very, very close to release time. And that's good news on the COVID front, although I really hate hearing that CVS's reason for wanting to add on people is expecting an increase in COVID cases.
Well, exactly. But and AstraZeneca is part of that England, because they've teamed up basically with Oxford University, who has developed the vaccine or developing the vaccine. AstraZeneca is going to be the manufacturer.
That was the Oxford vaccine. Okay,
Yep.
well, we got at least one then in the pipeline. That's getting close. Resetting the table for the morning. Friday was an up day on Wall Street for two of the three indexes anyway. Dow was up 112. S&P was up just a tiny little bit, up 47 cents. NASDAQ lost a little ground, down 42 on Friday. 45 minutes before we open, Phillip, what do the movements look like this morning?
Dave, I tell you, right now it looks like Friday all over again, and hopefully we don't end up like Friday. Hopefully we end up a little better than we did on Friday. But right now we've got the Dow up 0.5%. We've got the S&P 500 up 0.7, and then we've got the NASDAQ up almost 0.9%. So some nice little increases at the open this morning if it continues to hold for the next 50 minutes or 40 minutes or so. And then on the commodity side, we're seeing a jump. Silver up 2.1% and gold up 0.5%. So some movement there on those precious metals. And crude oil, we're seeing down about 1/3%, but up from where it was on Friday at $41 a barrel.
Yeah, I was going to say we're getting better at the very least, even though it's down from last night's futures call. At the very least, it's getting closer to a reasonable number. Overseas markets, Asian rim markets, mostly up at the close early this morning, largely on the strength of China saying, hey, we're growing. There was a computer glitch that shut down the Paris markets over in Europe. That's got everybody a little bit rattled. Both Great Britain and Germany are off fractionally halfway through their day, but we don't know how it's going to end because Paris just reopened a few minutes ago. Phillip, making retirement happen is a challenge, and it's a challenge some people don't realize they might even have in their portfolio. Risk is the word. How do I find you to find how much of risk I've got?
Dave, they can give us a call at 863-382-0037. You know, we go to the doctor every year for our physical. Your finances need a physical every year too. Give us a call and let's look at yours and see if they're in line and on schedule for your retirement date. 863-382-0037. Catch our website, statlerfinancial.com, where you can click a link there and schedule a time to talk on a phone. And then listen to us this weekend on the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on Highlands News Talk, 730.
All righty. And yes, it will happen at noon on Saturday. Got word last night that the Gators blew off the Missouri game for this week, so you will be there at noon on Saturday, all right?
All right, man. You can hear the hesitation in my voice because I'm just never sure exactly about the noon time.
And sometimes we don't know for sure until Wednesday as well. But yes, 3 times a weekend on News Talk 730. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, man. Thanks. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody, I want to thank you for joining us today as we get started on this week in October. Hey, we've got a few things coming up. Tune in every day to get caught up on what's happened with your finances. Give us a call for your financial x-ray, 863-382-0037. Hey, until tomorrow, have a great day.